We're going to talk about money today. Welcome everybody, and thank you so much for sacrificing a perfectly serviceable Wednesday night with me in this meeting, and I'll do my best to make it worth your while. The topic of this talk is money as a shared language between managers and developers. Let me give you a short introduction about me. I won't make it too long. My background is in web development. I started a web development firm in 2004. That was a great year to start a web development firm because everything what was J2EE, we started as a Ruby on Rails web development firm, and we basically had, like, we could choose from projects. It was Ruby on Rails was great and cool, and so the projects came streaming in. It was a high demand. We built all kinds of things. We built a content management system for Telegraph Media Group, which is a large publishing company in the Netherlands. We built software for a Chinese English platform for a startup that had 27,000 members. We built an e-commerce system for a retailer in Australia. We built a health information management systems, a planning system for computer service that delivered computer service at home. And we built event planning and a parliamentary system for the Episcopal Church in the United States. That's just a selection. I did that for 17 years, and now I no longer have a team, and I'm working as a consultant and product coach. So that's that. And let's now get to the actual content. So I would like to talk with you about two stories and use them as examples for why, to illustrate why money is important in software development. The first story is called All Bets Are Off, and it is about working on a project, software development project, without any understanding of cost of return. And the second is called All Hands on Deck, and it is about working on a project with a bad, one-sided understanding of the project economics. So let's get right to it. So the first story, All Bets Are Off. When we started in 2004, we worked in a very traditional way with estimates, right? And it worked pretty well in the beginning because all the projects we did were green shoot projects, right? We started from scratch, and we were pretty good at estimating. So whenever we said that something is going to take 6 weeks, then it usually did, or maybe it took 8 weeks, but it was never, we were quite accurate. It was, the estimates were never that far off. And our clients told us that that was pretty remarkable. And being the modest person that I am, my explanation was that I was just really, really good and smart, and everybody else was not so smart. However, as the companies that we were working with were growing, and their software as well, their software was growing and expanding and maturing quite a bit, the picture started to change. And here is a slide that gives you the accuracy of our estimates over time in one single project that we started in 2007. So on the left, you see the years. Then the second column, you see how the business was growing. So it was a startup. They started with 500 customers, and 3 years later, they had 102,000. Then the third column, I just give you an impression of the lines of code. So we started with around 7,000 when we went live, and that had grown to 33,000 lines of code that we were actively maintaining. And then the interesting column is on the right-hand side, where you can see how the best case and the worst case of how we were off in our estimates. And you see that in the first year, we were doing great. Sometimes we were 18% of the time early and on the budget, and sometimes we went 23% over. But that's in software. I don't need to tell you guys that this is pretty great. And things started to worsen quickly. In the second year, we were, in the worst case, we went 38% over budget. And a year later, that was 82%. And in 2010, we had one instance where we went 133% over budget. These are bad numbers. I know that this video is going to be on YouTube, and it's pretty scary for me to go on record as going over budget 133%, but here are the facts. So yeah, what was happening here? And our assumption at the time was, well, the assumption that we were smart and no longer worked starting year 2. So we needed to come up with a better explanation. And we figured that we had too little detail in the second year. We just needed more detail in order to make our estimations more accurate. So what we did in year 2 is we went to, instead of estimating based on what we had is like a single sheet of paper, and we went to wireframes. So we added a level of detail and we made our estimates based on the wireframes. That didn't do anything to improve our accuracy of the estimates at all. Okay, so what did we do in year 3? We went from, we thought, okay, maybe this is still not detailed enough. So we went from wireframes to detailed design. What did that do? Well, as you can tell by the numbers, it didn't help at all. It didn't make our estimates any more accurate. So detailed designs were not the answer. And our clients, and both us and the clients, were getting a lot less happy because they were getting their software much later and at a much greater cost, whereas we had to be on the defense all the time and explaining, like, you know, it's taking a little longer than anticipated, but if you need to say that like 4 times or 6 times or 10 times, then it becomes, you know, it sounds pretty bad, right? So we concluded that the problem was actually estimation in itself. We concluded that the problem was that as a project progresses, estimation no longer works. You need to deal with uncertainty. The uncertainty is there. We did everything we could to calculate, you know, find a better way of dealing with the uncertainty. Couldn't find it. Essentially, we had to conclude that uncertainty was something that we needed to live with. So we thought of what analogies do we have? Like, are there models out there that we can use in order to make things better? And as a matter of fact, then of course, I was actually doing a bit of investment at the time in the stock market, and I saw that you had this thing called the stop loss order. So what you could do in the is you could put orders in the online investment tools, and you could basically preset, you know, whenever, you know, I buy a stock for 100 euros a piece, and if it goes to 200 euros, I want it to be sold automatically, because then I take my profit. But when it goes down, then I want to limit my losses, obviously. So I put a stop loss order there for 90 euros so that my loss is never more than 10%, right? So could this be done in software? And we started actually doing this. We took 3 pieces of advice from the portfolio investment world. The first being finding the right investments, right? Just like when you look for certain stocks, you look for stocks that have a big potential, right? The potential to double in value, for instance. And at the same time, you want a low downward and a high upward risk, right? So you try to look for investment that make it possible. Secondly, you want to spread your risk, right? You don't want to go all out on one stock. You want to invest in different markets. You want to invest in different industries, in different countries, in different currencies. So you don't put all your eggs in one basket, right? And then the third is to limit your loss. So you want to make sure that that's what the stop loss order is about. That whenever something doesn't materialize the way you envisioned, then you want to limit your losses, right? Just to be sure, in the stock market, you wouldn't do this with a stop loss order. You would do this with an option, but just for the record. But that's a side note. Okay, so we started to do for this client, we started to do pizza research meetings, as we used to call them. And we basically, the goal of that meeting was to find investment opportunities. Like, what opportunities do we have that have this high upside potential and as low a risk as possible, right? And what we found very often is that, I mean, it used to be that they would jump to conclusions, right? They would immediately say, how can we do this in software? They had this idea and say, let's put this idea into software. Let's build a module. Let's expand the software. But sometimes we found opportunities that we could materialize actually without much investment in software. So here we started to have those pizza research meetings, and all the different departments, heads of departments, presented their ideas. And one was saying, we could, we have this idea, we think we can attract 5% more customers. And the other one said, we can do something to improve customer retention and so forth. And at some point, one of the call center agents said, I remember from our early days that we used to, they provided this service, and there was a call center that would take customer calls. And this call center agent was saying, we used to call the customer after the appointment, just to see how things had gone, right? Were they happy? Was something, was everything to satisfaction? And this call center agent said, we stopped doing that. And my impression was that people actually really appreciated us calling after the appointment to see if everything was okay. And we had a statistician there that looked into the numbers and said, and could see that the customers who had received that follow-up call after the appointment tended to stay, like by a large margin. So there was an option right there. All they needed to do was start again with follow-up calls, and their retention numbers improved incredibly. There was nothing that needed to be done in software. So then the other thing we did, we touched upon this before, the stop loss order. That's something else that we did. So whenever we came up with sort of a business plan where we talked about this expectation, like we think we should be able to get an X increase in customer retention, or we should be able to attract this number of customers with this idea. But if it doesn't work out, we want something in place so that, this the software that we built, is this whole development trajectory doesn't go out of, doesn't get very expensive, right? If it goes over the deadline. So what we did is we put a limit on the amount of time that we spent on developing an idea. And so we basically said, we have this €1 million idea, and we can, let's say we work on this so that development never costs more than €50,000. At €50,000, we stop working. If it's not done by then, that's our risk appetite, and we are not going beyond that. And we started doing that. And that was pretty scary. At the same time, it kind of worked. And let me show you the numbers. So what happened? So here you see a table of investment and returns for this particular customer over time. In the left-hand column, you see sprints. Our sprints tended to be longer than usual. I believe that most teams do like 2-week sprints or 4-week sprints. Some of our sprints were 6 or 8 weeks, so we tended to make them longer. That's why they were more expensive. Sometimes also with larger teams, that's why the investment is pretty high. You see the investment in the second column. So that was basically the cost that the client incurred by hiring us and working on this sprint. The projected return was what we expected to make out of this investment, right? And then the actual return is how much money we actually made on the sprint. And it was very scary in the beginning because we aborted the first 2 sprints. I can tell you by sprint 3, everybody was completely on edge because we had just written off two sprints, and we had and that included like €135,000 in investment, and we wrote it off. And we were expecting a 600K return and never got it because we decided to get out of it because we were just going hopelessly over budget and over time. We were saved by the 3rd sprint. We invested another 81,000, but we actually finished it on time. It was also the reason that the third sprint succeeded, is because we had learned we need to be very conservative in what we can actually achieve. So we scoped down a lot in the third sprint, and we really looked for the lowest risk, highest yield opportunity that we could possibly think of. And it worked out. So we didn't get the projected return, but we still got 350,000 euros, and that recouped all the investment of the 3 sprints, right? And from then on, we became a little better at finding good opportunities. The 4th sprint was a success. The 5th sprint was a failure. We had to abort. And the 6th sprint was a success again. And overall, over the 6 sprints, we invested 459,000 euros. But the client recouped that money. They made a 100% profit on that investment. They doubled their investment. So that was pretty good. So what are the differences that this made? Is that we went, this is not just about betting. This completely changed our way of thinking in terms of investing in the software. So the savings that we made was we stopped working on features and modules that didn't make business sense, that just required far more investment than we anticipated. We also found much better opportunities, right? So where in the past we would like thoughtlessly, basically like let's say the marketing department would hand us a brief and say, build this, how much do you think it's going to take? We made an estimate. We think 6 weeks, but if it would be 10 weeks or 12 weeks, we would basically go on and on and on and on until it was finished, right? So we were no longer doing that. And the returns that we got were pretty convincing, as you can see in this table. So I guess this is a good first argument on why talking about money is so important. But let's move on to the second story. This is another illustration. This story is called All Hands on Deck, and it's a completely different situation. This plays in last November last year, and I was coaching a client in London, and we were dealing with something of an emergency because they were working for a client and they needed an extension of their software by Christmas. It was November. The situation was, let me move to the next slide and you can see it. You can see the original team, a senior developer. They used to have 2 senior developers, 3 junior developers, and a product owner. 1 senior developer was sick, and the product owner had left with burnout. So we had a team of 4 left, and a deadline yelling in our ears, and this was pretty bad. And then, if you look on the right-hand side, you see these. That's the sprint table, right? So we had a bunch of to-dos. There were 5 items doing with 4 team members. That's bad. Then a whole long list of tasks for review. That's bad. 2 were in review and none were done. And this was only 1 sprint, and there was at least another, if not 2, that we had to complete before Christmas. And the situation was that I talked with the team members, and none of them had any confidence whatsoever that we would be able to complete the project on time. It was very time critical for the clients. They were basically missing opportunity if this wasn't ready by Christmas. So I would actually be interested, if this is all the information you have, I would like to hear from you guys. If this is all the information you have, what do you think? What would you do first and foremost? There's not one answer. Would anybody want to write in the comments on what they would do if they were confronted with this situation? A team with team members sick, lots of work ongoing. I see here, tell them the why. Could you elaborate on that? Maybe you could speak. The why of the deadline? Do you mean why it needs to be finished, or?
I was just referring to this is when no one is believing in the team that they reach their goals. So there must be a reason for it, and probably they never thought about like, why are they actually doing this project and why do they should get their hands on this project and try to manage it. Of course, this looks like it's not manageable. And all the other things like, yeah, of course, reducing the task and really concentrating focus on these things that are really important are true for sure. But I think the first thing you should do is, and I just assume it wasn't done or hasn't been done at this point of time, explaining them why they are actually there and doing it.
Okay.
To get them motivated again. So that was why.
So you see, firstly, you need to know if there's a motivation issue. If people know what, people are all thinking the same about the goals and the importance of why it needs to be done and so forth. Okay. Exactly. I hear you. Yeah. Okay. Yeah. All right. Well, I will. Were the tasks estimated before the sprint started? Yes, they were. That's a question from Ode. Yes, the tasks were estimated, and they actually had the confidence that they could do it before they lost the product owner and the senior dev. So the product owner and senior dev leaving was what demotivated the rest of the team, or at least that's what they said. Okay, so this is what I did. Actually, one of you already said it, like reduce the number of tasks. I agree. That's actually the most important thing as far as I can see. Reducing scope is my third point. I think it's terribly important. Yeah, what I did was, what was happening is that everybody was doing work. Everybody was coding at the time. What I did was I moved the senior dev into a coaching role. The juniors were very good. They were very hardworking, producing great code. And I figured if the senior dev is there to answer questions, to help them out whenever they get stuck and so forth, that would help them get unstuck. And that actually worked. The first thing we did was prioritizing the 4 review tasks. So we could, if we go back to the sprint board here, you see this whole list of things that were ready for review. So we focused on getting the review tasks done before we started on new tickets. Yeah, we imposed some WIP limits. I hope everybody's familiar with WIP limits, and just making sure that people don't assume new tasks before the tasks that were being worked on were completed, right? Because then you get those queues that are very demotivating. Here's an interesting bit. The team knew that they were doing it wrong. They knew all the solutions. I didn't tell them anything new at all. That's kind of weird. You're being hired as product coach and then you tell people what they already know. So the question is, why did they do it? Here's another question for you guys. They were very smart. They knew what they were doing. They were all working on tickets. They knew it wasn't the best way. They knew it was better if one of them was working in, was being available to, pair program, coach, review, stuff like that. They knew everything, yet they did not do that. I am curious to what you guys think was the reason why those people who were conscious of the problem still worked the way they did. Everybody working on tickets. Oh, they didn't want responsibility, I see here. Difficult to change behavior when overwhelmed by tasks. Okay, interesting. I hadn't thought of that. Yeah. So sort of trapped in the situation, right? They didn't know how to work otherwise. Okay. Yeah, actually they did know. They did know how to work otherwise. Still, they did not do it. The reason was hourly billing. They had been told by management. Well, it was worse than that. They hadn't just been told it. They had software that was clocking their each and every move in the project management tool. So it was tracking by the minute who was working on which ticket, who had which ticket open at what time. So everybody on the team individually felt the pressure on having to work on a ticket because they didn't want to be seen idling. And on top of that, management was pretty heavy-handed about it. They were saying, we are in the hourly billing business, and we want to maximize everybody's hours as much as possible, so that we can maximize our profits, right? And then, of course, I guess I'm not telling you guys anything new when I show you this graph that shows you what happens if you maximize capacity this way, right? Like if everybody works all the time on tickets, it basically means that nobody is ever available for anything, right? You need to have your ticket reviewed. Is somebody available to work on that? No, because they're working on their coding, right? So if you maximize capacity utilization, time to completion goes up and waiting times goes up. And that's, if we go back to this slide here, we see that essentially all those tasks are in the majority of these tasks are waiting. Let's look at to do, like for review, right? So you introduce a lot of waiting if you force people to be working on, to be coding all the time. So that's a really bad idea. So yeah, the conclusions. Economics matter. They have all kinds of influences on decision-making throughout a development trajectory. It's very important to look for opportunities that are low risk and high yield. And sometimes the solutions that you find are completely outside the scope of software development. They're actually in the business process. Third, the stop loss limit is very important. Like, make sure that you just don't go on and on and on and on spending time on something that apparently doesn't want to be built, right? If the project tries to suck you into into an abyss, then you need to give up at some point, and you need to decide upfront where that moment is, right? Fourthly, I am very much against timesheets and recording people's each and every move. Definitely no human hourly billing. I'm for team billing, right? So what the good thing about working with a stop loss limit is where you say, we're going to invest 6 weeks. You can bill, as a development company, you can bill the 6 weeks upfront and just say, this is the price. It's a fixed price, right? And you work up to 6 weeks. But you're not going to explain minute by minute what everybody is doing and why. It's very demotivating. As you guys also said, reduce scope if needed. That's one of the most powerful things that you can do if your project tries to, if you get bogged down. And spare capacity is very important. Sometimes that's all about WIP limits, just making sure as a developer, if everybody is busy working on tickets, you just complete a ticket, don't pick that new ticket. Look if you first see if you can help somebody else. Is there some code that needs to be reviewed? Is there a feature branch that needs to be merged? You need to do those things first before you start working on the next ticket and create huge queues down the line, right? So being a busy bee is really dangerous. It creates queues, it creates waiting, it creates budget overruns. It's bad in all kinds of ways. Okay, that was it. If you are interested in staying in touch, I have a blog called The Reluctant Product Manager. That's not me. I'm not a reluctant product manager, but the audience is reluctant product managers. And if you are interested in reaching out and discuss any form of product coaching, even some free advice is always fine. If you want to simply run a situation by me, I'm always happy to respond. Then reach out to me through email, jorn@e-accent.com. Okay, that was it. Thank you.